Hey all, welcome to ShareTrack. This is Raj here. The inflation report didn't come as a clear-cut, uh, decisive direction-setting number. I'm going to take you through the spreadsheet that I showed you a couple of days ago when we were talking about calendar for the whole week, economic calendar for the whole week. I'm going to bring it back again, and against the forecast and against the estimates, I'm going to plot the actuals that came in today. And you will understand why I say that. And from there, we'll go ahead and take a look at the indices and see if we can find any trends. So let's get started. Well, here we are in our spreadsheet that shows how the market expected the inflation report to be when it comes out and what actually happened. So let us look at Tuesday, February 14, 2023 out here. Inflation rate year over year, January, came in at 6.4 against the previous 6.5. So from that perspective, inflation has definitely dropped year over year by 0.10%. The forecast was 6.3 and the consensus was 6.2. Now, all of us know that forecast and consensus includes using some assumptions and doing some calculations. So comparing what happened against the forecast and consensus would not be a great idea, but comparing the actual with the previous is a much better idea. But unfortunately for us, many market participants use the consensus and the forecast in order to price or value the shares. And as a result of which, the forecast numbers and the consensus numbers do have a bearing. And when we contrast our inflation rate year over year for January against consensus, forecast, and consensus, so we find that our performance, the inflation performance for January, is not that great, but it's not too bad either. The deviation is just a few points. It's not like it's gone up by 1% or something. At the worst case, it's 0.20%, and at the best case, it's 0.10% over the forecast and the consensus. So I would say that it doesn't warrant a knee-jerk reaction, and we are not seeing any knee-jerk reaction in the market, in my opinion. Next, let us look at the number for core inflation rate year over year, January. And in this, previously we were in at 5.7, and now the actual has come in at 5.60. So again, 0.10% less than the previous month. So in my books, that's a clear positive. But if we were to look at the forecast was for 5.40%, but the consensus was for 5.50%. Again, once more out here, the worst case scenario is we have performed 0.20% worse, and the best case scenario is we have performed 0.10% worse than the forecast and the consensus, respectively. Nothing earth-shattering out there. When we come to core inflation rate month over month for January, in terms of the core rate, I think we have come exactly where we should be. I think there is a slight mistake out here. I'm just going to correct this. We are exactly at 0.40% as the previous month, and the forecast was for 0.30, and the consensus was for 0.40. We have come in at 0.40. Again, worst case, we are off by 0.10%. Nothing big as such overall, considering the other parameters like inflation rate year over year and core inflation rate. Now, if we were to look at inflation rate month over month for January, this is where things are looking a bit worse compared to the previous month. But the forecast was for 0.40 and the consensus was for 0.40, and we came in at 0.50. So 0.10% more. CPI January was previous year was at 296.797, and this year it's at 299.17. Forecast was for 298 and consensus was for 298.606. So I think we are off by 0.57, and that's not very big considering the denominator. So overall, I think because of this, the market participants are right now trying to figure out what to do. And in my opinion, I think that uh, the stock price charts generally indicate a bit of bullishness out here for QQQ and for IWM and all that. So I'm going to walk you through the TradingView platform, look at these indices, and I'll point out why I think they are bullish, and we'll take it from there. Well, here we are in the Nasdaq futures, and we can already see that Nasdaq futures are positive by 0.31%. So that's a good positive in my books. We also have a narrow range bound trading out here. It's a nice doji candle which has pierced through the upper restraints of the bull flag that we have here. And the doji candle is being supported by the 10-day simple moving average, which is sitting at 12,561.70. And that gives us a lot of support out there. Of course, we have the support from the bottom of this bull flag, and our momentum is above average and a bit flat, and MACD is just about on top of the signal line. And I'm hoping that we get an opportunity to bounce off this. That's one possibility. The second possibility is that we may come back down, but in that case, we get a very strong support here, and then we can rebound back up. Now, what could also happen is there are traders, there are bulls who would like to set up a bear trap, and they would let the price fall up to here, and then they would take it up again so that all the calls that were sold can be capitalized on. And that's probably one of the strategies that might break out in the market. So that could help the price come down. At the same time, there is a possibility that it can go up. So those are the two possibilities that are available. When I look at the indices out here, because momentum is above average, I'm feeling that we are going to break out on the upside. Typically from a bull flag, we always break on the upside. So that's what I'm expecting for Nasdaq futures. Now let's look at indicators. In indicators, let's go to see oil. Oil has nicely come down. This is looking more like an evening star pattern, that there's a trend reversal out there. But we have very strong support from the 10-day and the 50-day simple moving averages. And also it's a very narrow range bound trading out here for US oil. Our momentum is still above average and MACD is bullish. So we still have the possibility of going and challenging this 100-day simple moving average, which is the fluorescent blue line that you see here. And we are likely to challenge that if we go further. But because there's a trend reversal signaled out here, I would expect oil to come down further before making any move upwards. Next, let's look at QQQ. As predicted yesterday, we jumped off from the bull flag, and we have made further progress upwards. We opened lower, and then we moved up during the day, and we got stopped by the diagonal line of resistance of the bull flag, and we still have support from the 10-day simple moving average. Our MACD is still bullish, just barely, but momentum is above average and slightly flat. So there's a good chance for QQQ to move up. And in case it doesn't move up and it comes down, it has got very strong support out here in this horizontal blue line, which was the resistance for the long-term consolidation pattern for QQQ. And we also have support from the bull flag, the diagonal line of the bull flag. So next, let us look at S&P 500. S&P 500 is nicely checked by the diagonal line of resistance of the bull flag, but it has got support from the bull channel on which it is running, and it has also got support from the bull flag support line. So overall, and plus on top of it, it has the support from the 10-day simple moving average. So I'm thinking that this doji candle shows the indecision, where traders are still trying to figure out what to do with these numbers, because they're not resoundingly bad and they're not resoundingly good. Of course, then I spoke about the interest swap guys and what they think about the interest rate, inflation, and where it would be. Given all those things, I suspect that we have a good chance of moving upwards. Also, our momentum is above average, which is my main barometer for looking at a bit of bullishness. Now, let's look at the Russell index. In the Russell index also, we are now moving nicely along the bull channel that we have. Plus, today we have been given support by this horizontal line of support at 191.38. So we came all the way down, hit the diagonal line of support of the bull channel, and then we went back up, and presently we are held up nicely. The resistance for us is coming from the 10-day simple moving averages. Once we break above that, we'll start building strength to strength. That's what we are looking forward to. Unfortunately, MACD is bearish, but momentum is still above average, so I would be happy that if the momentum starts picking up, and that can automatically take care of the MACD. Now let's look at Dow Jones Industrial Average. It has broken above the bullish Bennett, and it's right now struggling against the resistance of 341.37, which was earlier a support line for us. So it's struggling against that, and it's a very narrow doji candle. I'm going to expand the screen so that you can see how tightly bound the indecision is. And also to me, this seems more like a bearish harami, which is a Japanese candlestick pattern which predicts a bearishness going forward. So I would be a bit wary about Dow Jones. And if I was to impose the direction shown by Dow Jones on the other indices, then in order to be conservative, I will say that the bias is more towards all the indices dropping than towards all the indices going up. Maybe there will be a brief period of consolidation, and then we start moving up again. So that's one possibility. Now let us look at VIX and see what VIX is telling us. So if we look at VIX, we have come down to 18.94. These are all pretty nice levels to be in, and they lend themselves to a bit of swing trading, and it's pretty safe at this point of time. And if I look at the MACD, it's tending towards a signal line to cross over to the bearish side, and also the momentum has dropped below average. So I'm thinking that VIX indicates that going forward there could be a good deal of buoyancy in our indices. The only dark horse out here is Dow Jones Industrial Average. That's what concerns me the most. We had a Morningstar pattern, and then we are kind of looking at a trend reversal coming up here. That's what worries me, and it's a trend reversal from a Japanese candlestick point of view as a bearish harami. But otherwise, we'll still have to wait and see the third candle develop, the next candle develop tomorrow in order to decide whether it's a trend reversal or not. So that said, let us look at the US dollar index. The US dollar index is struggling at the confluence of the support from both the bullish Bennett as well as the resistance line of the previous bear channel, which has now become a support. So it's moving in a very, very narrow range. Again, indecision out there. People are not able to decide what to do. Let's look at established technology. If I look at Microsoft started off very low in the morning and then rapidly picked up. And again, we are seeing indecision, a very narrow, tight band of trading. And we are well above the 10-day simple moving average. We are well above all the 4 averages. The chart is looking very strong. MACD is bullish. Momentum is also above average. And RSI is very close to being overbought. So there could be a bit of consolidation. And I'm going to draw a diagonal line of support out here to show what it looks like from my perspective. This is what I am seeing here as the line of support for Microsoft. And then if you look at Apple again is looking pretty strong in the charts. MACD is bullish, momentum is above average, and we still have a chance to hit the target of the cup and handle, which is going to be at 161.14. So I'm looking forward to that. All the 4 indices are below the price line at this point of time and providing strong support. Again, you will see a indecision out here. It's a doji candle with wicks on both sides, tight range bound trading. Amazon is also showing indecision, but it is bullish, very, very tight range bound trading. Our momentum is not looking that great, and MACD is not looking that great for Amazon. If you look at Google is very weak, but it's managed to hang on to the support at 93.85, and it's got a bullish hammer, even though the hammer is red in color because it's all clubbed on the top. It has become a upright hammer. That's why I'm thinking that the bulls are succeeding in holding it up there, whereas the bears are trying to hammer it down. Momentum is not looking in favor of Google, neither is the MACD, but the support at this point of time at 93.85 is still continuing to hold. With that said, I would like to go and have a look at commodities. And if you look at copper is still doing well, and it's getting support from the 10-day simple moving average. So it kind of indicates that there is a good health in the economy. And I'm thinking that if copper is doing well at this stage, it could help in reducing the supply constraints and thus bring down the inflation. So that's how I would interpret this. And you can see that the wheat price is also going down steadily. So that also brings down the inflation. And gold is also down. That would show that inflation is going down. Now let's look at genomics. SQZ Biotech is up 1.75%. I do not see any new news article out here. They still have the notice from NASDAQ, and they have to somehow take the share price to above $1, either give a plan or do a reverse split. And since the notice has come, the share price has gone down further. So I'm not sure what SQZ is doing out here, but they need to communicate sooner rather than later. I do not see why the share price has gone up 1.75%. I really don't know. I'm a bit confused. Verve Therapeutics is up 0.50%, and we had the Morningstar out here, and upward trend continues. We are still getting support from the 50-day simple moving average, which is at 21.14. We just about gone above that, and we are trying to convert that into a support, and we'll know whether we are successful at the end of the day. The next resistance for us is the 10-day simple moving average, which is at 21.90, which is this yellow line out here, the wavy yellow line. So end of the day, we'll take stock of what's happening out here. Caribou Biosciences has eked out a little bit of a positive today. It's up 0.30%, but momentum is weak, MACD is weak. So it's not looking great to me today. And if we were to look at Editas has managed to stay positive today. So the Morningstar pattern continues to improve. We have very good support out here at 9.65, which is still holding us. But as you can see, the market indecision is still seen here in the doji candle that you see out here, which is very range bound and very tight. I'm just going to magnify this so you can see it's a very, very tight range bound price action. The momentum is still above average, so I'm happy about that. MACD is become slightly bearish at this point of time, but if momentum picks up, we should be fine. And then I would like to look at DNA. DNA is down, and I think we are on a downward pattern for DNA. I'm still holding my cash. I'm going to buy DNA when it comes closer to 1.59. I'm waiting for that opportunity. Right now, it's at 1.70. And let us look at Allogene. Allogene is down 1.47%, and the chart is also looking weak, further downside possible. Bluebird is also looking very weak on the charts because momentum is below average, and MACD is also bearish. On top of that, we have a bearish Harami following up here with this green candle for the previous day engulfing the red candle for today. And again, the red candle is very, very range bound, and again indecision out here on the pricing of Bluebird, and the 200-day simple moving average is providing support to us for the last 2 days. I don't know how long it can withstand. We have no news from Bluebird. They better start giving us some information about SkySona and how it's being commercialized. What are the efforts towards getting a payee contract or agreement the way they did for Zynteglo. So something like that has to come out. At least they can declare the patient numbers that they have, and that can help the share to rebound. In the absence of those kind of news, this is going to be the problem here. Fate is not doing well either. Chart is looking very weak. Illumina is down 1.77%, and compared to yesterday, we have opened lower than yesterday's close, and we have fallen down further, but we got pushed up from the support at 208.37. Momentum is still above average, so I'm hopeful that Illumina will recover. CRISPR Therapeutics is down 2.15%. I don't know why CRISPR is being beaten up so badly, but we have formed a bearish Harami out here, which is a bearish sentiment out here from a Japanese candlestick perspective, and our resistance of 50.83 is forming formidable resistance for us today. We broke through that support yesterday, and that's acting as a resistance, and the 50-day simple moving average, which is this orange line, is giving us a support. Momentum has fallen below average, so CRISPR Therapeutics is definitely looking weak, but it should not. Watch out for my video later this week when I'm going to argue why CRISPR Therapeutics should not be so weak and why it could potentially be a buying opportunity in CRISPR. So watch out for that video later this week. PACB is down 2.58%, and it's not looking good in the charts. Everything is weak out here. Bionano Genomics is down 1.91%, and again looking very weak in the charts. Beam Therapeutics is down 2.32%, again looking very weak in the charts, both momentum as well as MACD. Intelia is down 3.28%, again looking very weak in the charts. Invite is down minus 4.12%, again looking very, very weak in the charts. So friends, as you can see, overall the genomics watch list is pretty weak at this point of time. And many of them have reasons for being weak, as I mentioned while I was doing the analysis. But overall, QQQ is not affected that much by the inflation news, and you saw the numbers. I contrasted them with the actual from last month. It shows a downward trend, downward to flat kind of a trend, which is nothing to be very alarmed about. It will take a little bit of time to improve the inflation prospects. If you look at the oil prices, they are much better. And one of the problems with the CPI at this point of time, I feel, is that because interest rates are high, I think mortgage rates are also going to be high. Of course, US has got these 30-year mortgage rates, and we say that it's not going to matter that much. But the fact remains that if any new landlord wanted to buy a new property and give it out on rent, they wouldn't find it convenient to do so because of the high interest rate. If any existing homeowner wanted to sell their home and buy a new home, they will again find the same problems. As a result of which, I think the rental stock is going to go up, and that is feeding into the consumer price index. So it's a byproduct of the high interest rates that we are doing in the first place to bring down interest, to bring down the inflation. This is what we are finding in Canada. In Canada, we have 5-year terms for mortgage. So they get renewed every 5 years, 3 years, or 2 years. And therefore, we are finding that our interest rate hikes are directly feeding into inflation because rents are going up significantly, and monthly mortgage payments are going up significantly and taking a larger chunk of the consumers' spending capability, and that is reducing their ability to spend on the other things. And even though the demand for other things is going down, inflation stays elevated because of the interest-related effect that is being passed back into the CPI. It's like looking into the mirror. So somewhere down the line, the Canadian Central Bank has to do something to resolve this, and that's the reason why I think they have decided to put interest rates on a hold, interest rate hikes on a hold, to watch what is going to happen. And they have clearly stated that it's impacting the housing market much strongly than it would do in the US, because US has got 30-year terms. So that, my friends, is what I think is happening here. And before I wind up, I would just like to take a quick look at the headlines and see if something new has happened. Please bear with me. So here I am on the CNBC website looking at the headlines. I can see Dow Jones has gone negative 0.36, S&P 500 has gone negative 0.12, Nasdaq is still positive today. It's up plus 23.86. It opened higher, and Russell is down minus 0.32, and VIX is down minus 7.28%. So it's a mixed bag out there, but I think on balance, investors are trying to make up their mind on what to think of this new inflation reading. In my opinion, I don't think it's something to worry about for this month. So that's what I'm thinking. Next headline out here is Ford holds production and shipments of its electric F-150 Lightning due to potential battery issue. Boeing orders and deliveries slip in January before massive Air India jetliner sale. Here's a breakdown on the inflation report for January in one chart. Let's see what it looks like. Yeah, they give this chart every month. So eggs are topping the chart with 70% inflation, butter and margarine at 32%, fuel oils at 27.7%. So oil still has potential to go down. Utility, piped gas services up 26.7%. That has potential to go down. Airplane fare is up 25.6%. So if fuel oil goes down, airplane fare will also go down. Motor vehicle repair is up. Frozen vegetables is up 18.6, lettuce is up 17.2, public transportation 17.1, cereals 15.6, pet food 15.1, motor vehicle insurance 14.7, electricity 11.6. So if we were to look at the ones which have gone negative, uncooked beef steaks, bacon plus related products, major appliances, women's dresses, computers, used cars plus trucks and televisions. I think these are all discretionary expenses to a good portion. I'm not talking about beef and bacon, but I'm talking about major appliances, women's dresses, computers, used cars and trucks and televisions. People might have put it on a hold because they have to spend on some other things that are become more expensive. Like, for example, they need to have a fuel oil for their vehicles, and furnaces and other things for heating, and piped gas is needed, and they need eggs and butter for their food. So I think money is going into other places, therefore these are falling down. So this will again lead to a little bit of cooling of the market. So I think the inflation picture here shows that some parts of the market are cooling and some parts are still hot. And it's going to take a little while, and the ride from high inflation to moderate is going to be a bumpy one, and we are going to see jumps and starts here and there. But overall, the direction seems to be in the right direction. It has not gone above. It has continued on its trajectory down. It has just consolidated a little bit in this month, I would say. So overall, I'm not that much worried about this. Now, let me look at what else we have here. There is... Josh Brown buys Oracle on Uber deal, says 2023 could be the stocks coming out party. I haven't seen Oracle in a long time. I'll have to do a video on that. That's about it. Ukraine war live updates. Ukraine allies promise more aid. Kyiv presses for jet fights. Stocks making the biggest move midday. Palantir, Nvidia, Avis, budget and more. Guys, I'm going to make a video on Palantir and Nvidia. I have Nvidia in my portfolio. I was a fan of Palantir before they had so much of equity dilution, but I think it's time for me to have a look at them once again. So that's all I have here, my friends. And with that, I would like to bring this video to an end. Thanks and have a great day. Bye for now, and thanks for all your support. I'll see you soon.